October 9th. Is my microphone working? All right, let's turn it up a little bit. It's a Wednesday, and holy crap, there's a lot of things going on today. One, market turmoil, probably due to like trade talks and stuff. I'll show you the account in a second. By the way, this is the, of course, video log that takes 30,000 to a million. It's gonna happen eventually. Right now, I'm not sitting on an all-time high, but not too far away. So anyways, other things that are going on. Robinhood comes out with its cash management. And so far it's received well. We'll see. They ran into some legal troubles before. We don't know what's going to happen now. Supposedly they have, SBIC and FDIC insurance for the cash that's inside the brokerage. So they're kind of like running a double bank type of thing. A brokerage account, cash, and a bank deposit cash at the same time is insured by both. Up to 1.25 million spread across 5 different banks, one of which is Goldman Sachs and Wells Fargo. Now, that's all great, and other things that are happening. Silver's about to break out. That's right. Now, I don't know if it's going to break out exactly, but my bet would be that it is going to break out. Could there be a big correction first and then a breakout? Sure. Obviously, I don't know exactly what the future holds, but my bets at this moment are that silver is going to have a really nice breakout. And unfortunately, I haven't really found any opportunity to buy up more EXK because that's how I play the silver market, right? Through EXK, because I know the company well, but it actually is acting really strongly and not falling below like the 220, 230 level that I was hoping for to accumulate some more shares, because I started my third public scale in on EXK, if you remember, except I haven't really scaled in because I haven't gotten the chance, but that's actually a really, really strong sign. So I don't actually have much silver on this account. I don't have much EXK on this account, but trust me, I'm profiting from it if it does happen. I just I wish I could buy some more on this account. Plus, I don't have too much free cash right now. Maybe I'll infuse some more, but I was hoping that I'd hit that $70,000 mark before I put some more money in, but I'm really having a hard time hitting it. I hit an intraday of like 69,700, but now I'm all the way back down. Let me show you at 68,700. So, mostly because of Apple. I was intraday at 69,350, but then eventually it dropped off, hovering around 69,300, and then boom, after hours, Apple got hit, probably because of this news over here about the trade talks. Also, in other news, like I forgot, I don't, this is not where I get my news, but it's as good as source as any. So Apple, some questionable judgment calls out there. First, they removed the flag, the Taiwanese flag, from their app, and now they take down apps to help track Hong Kong police in Hong Kong. Like, who knows? I mean, I don't know what's right or wrong here. I'm just saying that it's questionable and it's controversial. So they're making some weird moves. I guess the overall picture that they're painting is that they really like to comply with powerful entities. One, they're in bed with the US government, and two, now they want to get in bed with China. I mean, obviously, they have a lot to do with China. They have a lot of components made there and the big market over there. And so they obviously want to appease the powers that control those regions. So I'm guessing they're just selling out in order to survive and make money, which is fine by me, since I own 47 shares, right? So that's good. All right, and what else is in there that happened today? C-SPAN, a nice pop up. Thankfully, it was starting to drift towards $10. And I was kind of getting a little bit worried whether it made the right choice to let it run to 1250 or not. So it's gained some ground back above $10. Obviously, Apple had that after hours dip. It was up 143, and you can see after hour it ended up plus 1.17, and you can see after hours is down more than it went up today. So it's down by 120. So that's the price action for Apple today. The options haven't reflected that because options aren't reflected in off hours, their movements. Okay, so anything else that's eventful? Let's see. Look at uranium. There's always some action, and that is true today as well, with chemical dropping down 40 some dollars, $45, but still above $9. And my options are looking good to expire. My $12 call is obviously going to expire. I'm sorry, that's all the way in January. Let's see. How come these are not ordered in dates? It's weird. That's fine. We'll roll with it. So I got the $9 put expiring hopefully in this Friday. Or not. If it drops below 9, I'm happy to own some more chemical. And then another 1018 over here. The $10 call is probably going to expire as well. And this $10 call on the 25th also will probably expire. All right, so looking good in Cameco, even though the price is going down today, still making money. And that's it with the accounts. As you can see, I have DEM here. My position is a little bit higher now. I really want to accumulate a lot of this. I really want to accumulate the dividend paying emerging market fund. I think that emerging markets are going to make a comeback. They have a lot of room to catch up to the US markets, and so I'm kind of buying an overall all-encompassing ETF. Now, there's a lot of popular talk about, maybe I should talk about it here, is about ETFs and how all these indexes are in a bubble, and it's best to buy individual stocks outside of funds and all that, and that's where all the money's at, and once the bubble pricks, everything's going to go down except the stocks that are outside the ETF because they don't get sold, blah, 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 blah. And those are all fair arguments, but from my experience in the market, and if you probably listen to quite a few of my video logs here, you'll know what my opinion is and all that, which is it's all priced in, right? Every single thing that you might think of, including the fact that a company's outside of the ETF, that's already priced in, right? If it gets included in an ETF, that's all priced in. All right, so at least the risk of it, the possibility of it is priced in, right? So you could have a major move in a stock suddenly, but it's not like that wasn't priced in at all into the stock, that risk of that happening, right? So for example, if there's a 20% chance that a stock might get included in the ETF, it will be priced, let's say, at $12. If there was, I'm just making stuff up, by the way, arbitrary numbers off the top of my head. Obviously, it doesn't work. Percentages don't work exactly like that, but and then if there's a 50% chance, maybe it's at 15%, right? And if it's like 90%, maybe it's at $19 or something like that. So all of that stuff is already priced in. Obviously, it will close the gap. Let's say it gets included, you'll go from 19 to 20 or from 12 to 20. So you're still going to see a big move based on an event. But prior to that, the possibility of this event happening has already been priced in. Just like all the risk and all the possible things that could happen to a miner are already priced into the stock, right? So you could have a lot of upside, a lot of profits and all that, but your mine could get flooded, right? Or something else, earthquake, I don't know. You could have a mining disaster, a bunch of people could die. You can get sued and go bankrupt, right? So all these things are already priced into the stock, the risk of it happening, right? And sometimes you even hear a term like it's priced for perfection. That means, investors don't really think that there's much that can go wrong with a specific stock, right? So even investors use these terms all the time, and I just don't see there. Even though a lot of smart people are saying this thing about bubble index funds, I just don't buy it. I just don't buy the bait. I think there are plenty of analysts out there that work with big corporations or small little studio type of investment firms that actively look for these good companies and they actually bid up the price to what they think they should be, right? So anyway, closed-end funds, whatever. You get the point. All right, moving on. So what was I going to talk about? Silver, index funds, the account. The other big thing that happened, all right, is PG&E, right? So the lawsuit of PG&E. Let's go over here. PG&E, I think it's like PCG, yeah. Look at this move, 27% down after hours. That's crazy, right? And it's already down a lot. Like over here, look. Let's go to the 5 years. So I think the whole thing started. Correct me if I'm wrong, but the whole thing started because of the fires in California. I think. All right, they're getting sued. They started some fires, blah blah blah, and now they're having to pay out all this cash. Correct me if I'm wrong on any of these elements. I just gloss over the articles. I just think it's pretty exciting price action, right? But the company, it's down like 90% since its peak over here in 2017 September. So this is a really huge downturn. I mean, just look at the week action here. It was at $11 something, and now it's at 8. If this price stays down low, or if it gets lower, I'm honestly thinking of just buying some. I'm just gonna put some money into the account and buy like a grand or something like that, PG&E. Now, it could cost me money. It's a big gamble, but PG&E is pretty much like a monopoly, right? Um, it's got support from the state, and the state's got a lot of tax revenue. So if anything happens to PG&E, it's a monopoly. The state can't go without electricity. It's gonna get bailed out. You know what I mean? They're not just gonna let it sit over there and go bankrupt and leave everybody without electricity. At the very least, they might nationalize it. But either way, I think the money is pretty safe with PG&E. So my guess is that these people here that are selling this company, not Californians. If you're from California, PG&E is the way to go. So, anyways, I might actually buy this because I don't see a bankruptcy going on. I think they're gonna get bailed out if the going is too tough. They've already obviously cut the dividend a long time ago. They're not profitable, obviously. They don't even have a price to earnings ratio. Market cap's all the way down to 5.7 billion, and they control like the whole state. They provide gas and electricity um, to like the entire state, basically. I mean, I don't know. I'm probably grossly exaggerating, but it's big. I mean, I don't even know of any possibility of where I live to switch to a different company. All right. So PG&E, really interesting. Other things that are happening, GE is still dragging down. It's at the bottom here, and it's forming like a really big bottom. So I think this stock is ready to get bought out by someone, and I just don't know who, but know what he does. But I think it's about time now that it's out of the news cycle. I think that people are actually finally looking at it. It's still a really big company though, which is it's 72 billion, and it's gonna be tough to buy it outright. Anybody, the only person who could buy it is Buffett or some bank, but I don't think banks are into buying whole companies like that. And Buffett probably not gonna want to use all of his cash on something like this, where he could get a better company. So I don't know. It probably have to fall further. Probably have to fall further. I'm thinking on the fly here. Sorry, it's my thought process. Okay, so a lot going on, right? PG&E big drop, and then we have so here we go, the cash management for Robinhood, and this is what it looks like, by the way. And you can you go into here. So this is the account, and you go down here. They create a little tab, and now this thing right here. I know. I should have used that software. Somebody suggested the software. But anyways, if you tab this thing, you actually go up in position, right? You can use a double finger technique here. The triple finger doesn't work as well, but I like this technique. It's really fast. So you can go up in position, and you can get your cash management sooner. You know what I mean? And what they're supposed to be doing, right, is they're gonna give you a debit card that looks like this, all right, or you can pick your colors, and you can use your brokerage balance as a debit card. okay, to spend anywhere around the world, really, with really low fees. I think only get like maybe a 1% international fee or something like that. I just glossed over the details, but I mean, it sounds pretty interesting. Not just that, but the fact that you're going to be getting 2% on the money that's sitting just in your account, which is something that other brokerages like E-Trade and stuff like that provide, right? Whenever your like money is sitting into the account, it's not just sitting there like in Robinhood, it's earning you interest. They basically put it in money market account. That's what it's called, market money market account, and it earns whatever the going rate is that the Fed has set on overnight rates and stuff like that. So which currently is between I think 1.75 maybe 2%, something close to that, and Robinhood is offering 2.05% on the money at the moment until further Fed interest rate changes. So I think it's pretty interesting. Um, I mean, I guess they got to do something to compete with the other brokerages since they dropped their commissions down to zero, just like Robinhood has. And I think this is probably a nice marketing step in the right direction. But honestly, I don't think it's that big of a step. It's just cool. It's something that they should have had already, but they're just now implementing, and that's totally fine. Like Robinhood's been improving their platform for such a long time that and they're only going forward and have proven that. Like if you guys if you, I don't know if, tell me if you remember when Robinhood first came out. I was one of the first people to get it, like a long time ago, although I didn't use it for a long time. But when the app was first introduced, it was so bare bones. You could just buy, not even every company, right? You could just buy American companies on the NYSE or whatever, and that's it. And you had to wait for your cash to be deposited. There was no instant deposit, nothing like that. There was no Robinhood Gold. There was no options. There was no margin. There was none of those features. None of those features. And your money didn't accrue interest when it's just sitting into the account, right? And you had to wait for the trade to clear before you can get your money out, right? None of this like instant stuff. None of this margin. It's none of this options. Nothing like that. They introduced options later, which I thought was the big. That was the big breakthrough, right? Having options in such a different and simple way than all the other brokerage houses, I think, is what stood Robinhood apart. Aside from the fact that they're all free, which was also a big one, you know. Like I remember Trade King or something like that had the lowest option trades at the time, and people were using it because of that. But now Robinhood with zero, I mean, come on. Yes, it may not be like a pro's way to trade or day trade because of execution rates and this like that. But for someone like me, who doesn't day trade, and for the regular Joe, like I think regular Joe personal investor, kind of like me, I think that's a perfect way. It's a perfect choice thus far. All right, so I think I've spoken a lot about all of this, and my mouth hurts from talking. All right, I think that's it for now. Probably make another video maybe on tomorrow night if I can. If not, probably over the weekend. All right, y'all. Hopefully, making a lot more money than me. I've been stalling over here. I will make a nice big move soon, though. Hopefully, things are happening. All right, silver's gonna break out. Hopefully, I can get that PG&E trade down, and we'll see what happens. All right. With that said, peace out.